Hey there, lifestyle dentist. Good news. The big, beautiful tax bill passed. Good news or bad news, I guess, depending how you're looking at it and what your stance is on the bill. But either way, if you're a business owner and a dentist, there is lots to cheer about with the big, beautiful tax bill. So let's take the good with the bad. So a couple things to go over just so you're aware of, and really how the next couple of years, if you're smart with your income and your tax strategy, could be some of the best years of your life to build true wealth and passive freedom, passive income freedom. And so we're going to go over some of the big parts of this tax bill and how it can really benefit you as a dentist, especially as a lifestyle dentist. Find passive income sources besides just your practice. So number one, and probably in my opinion, bar none, the best thing that got passed is the 100% bonus depreciation. And it's not only a temporary thing, it's permanent. So that is great news if you're a business owner, if you're a real estate investor, if you're just an American. Like that's good news if you know how to use it right. So, but especially you have to be a business owner essentially to be able to take advantage of that. So bonus depreciation, this is where if you purchase something, you can depreciate the entire amount in year one instead of doing it over 27 years like you would a residential property, or I think it's 39 years. Don't quote me on that, but I believe around 39 years for a commercial. You can do it all in year one. You cannot depreciate the land. You can never depreciate land in a real estate purchase, but everything else you can depreciate. Your building, the flooring, the plumbing, all that good stuff could be depreciated. And so what that means, say you bought $1 million dental building in 2025, they're going to take out a percentage of that for the land, say whatever, 10, 20% of that value is from the land, but everything else could be depreciated. So you could potentially have rough numbers anywhere from, I start getting in trouble when I start doing the math. But if you'd basically take a third of $1 million would be 300,000, so say 300 some $1,000 potentially could be eliminated from your tax burden from year one if with a real estate purchase, if you can qualify. And there's a couple things to qualify for that. One, the golden ticket, if you have a spouse that's a real estate professional, that's awesome because then you can do it regardless of if it's your business or a short-term rental or long-term rental. And so that's the ideal. But maybe your spouse has got a great job and it doesn't work for him or her to be a real estate professional, or they just don't want to deal with it. So, but if that's the case, there's also ways that you can to get bonus depreciation though. One would be if you're buying a building for your business. So if you're buying a dental building that you're going to house your dental practice in, or you're buying a storage that's specifically going to be for storing your own equipment, whatever it is for your business, it's got to be a true business expense that you're doing for your practice. If it is specifically for your business, you can get a 100% bonus depreciation on that, whether your spouse is a real estate professional or not, because it's for your business. So that's great news. You can also do it for a short-term rental. And so short-term rental, that is, you put on Airbnb, you're renting it for 7 days or less. That is another qualification where you only have to put in 100 hours per year, and you have to be considered doing the most work of anybody else. So if you're managing it, you got it on Airbnb, you're getting the messages on, hey, do you have a baby crib or a blender at the house I'm renting? You answer those questions. Okay, you're materially participating with that short-term rental. So year one, you can take 100% bonus depreciation. That is a huge savings where really I was talking to a friend in our mastermind. I said, with this new tax bill, paying taxes really becomes an option depending if you strategize with a qualified CPA or tax attorney. And I am not one. Just again, full disclosure, this is for informational purposes only. Do not take anything I say besides as my own opinion, because I'm not a CPA. I'm not a tax attorney. So do your own homework. But I have researched it, and I've talked to a lot of really good CPAs and tax attorneys, and that's why I'm sharing this information with my fellow dentists. But do your homework. Make sure you verify all this with a good qualified tax professional. But it's a great way that you can reduce or eliminate your taxes where you're not paying taxes to the IRS because you have qualified deductions through your business or your real estate. And so Bonus depreciation is huge. That's a huge benefit. And that also includes for qualified business expenses on equipment. Say you need to buy, new dental chairs or a new cone beam machine. You could buy that in year one, 100% bonus depreciation, that entire equipment purchase. You could even do a truck. This is something I heard Mark Kohler talked about, where you could buy a truck in December for your business, where normally maybe you're going to use the truck 70% business, 30% just for your own personal use. But if you buy it in December and by golly, you use 100% of that truck for your business to bring files back and forth from your home office to the clinic and pick up some supplies and whatever else, that thing's 100% for your business. That you can 100% write off that brand new nice Ford F-150 as a business expense. And even if next year you use it more like a 70-30, you can reap that tax benefit for 2025. So that's huge with the 100% bonus depreciation. SALT tax. This is something that applies if you're in a state like California, New York, where they have high state income taxes, where you can deduct up to $40K off of your income of what you paid for with state taxes off of your federal income. So that's another way you can reduce your tax burden legally with the SALT tax that was passed with this new bill. QBI, qualified business income, where you can reduce the amount of business income you can make that you're taxed on by roughly 20%. Again, it can phase out. You got to do your math, but rough numbers, if you made $100,000 in your practice, you with the QBI only be taxed on roughly $80,000. And so that's another big benefit for tax owners or for business owners on reducing your taxes. Opportunity zones. This is another big one in real estate, where you could buy a piece of real estate in an opportunity zone. And say you had a big sale from your practice, you sold it to a large DSO or private equity group or whatever, and you get this big 7-figure payout. You could take that, buy a piece of real estate that's a qualified business opportunity zone, hold it for 10 years, and never pay taxes on it ever after that 10-year mark, if it's in a qualified business opportunity zone. You may or may not do that, and I would not buy any piece of real estate if it doesn't make sense, it doesn't cash flow, it's not a good asset long-term, whether it's in an opportunity zone or not. But if you could marry the two, that's an amazing opportunity that you could do. Another one is if you have an S Corp, there's strategies where you could have your S Corp pay your state taxes, which helps to kind of dance, especially if you're in a high state income tax state, where it can lower your overall taxable burden. And so it leaves more to be deducted with that $40,000 with the SALT tax. Talk to a qualified tax professional, but there's options that you could look at if you have high state taxable state where you're paying a lot of money, like, again, California, Illinois, New York, New Jersey. There's a list, but anyways, something to consider. Child tax credit. That's $2,200 per child. So good reason to have some more kids if you're in that stage of life to have kids. And if you're not, if you already have kids, it's a nice little perk. So lots to be excited about as a dentist to help reduce your taxes and use that income to build your wealth, to really create real passive income and create that lifestyle that you want, where you can make money when you're working or not working, so that you're practicing your clinic becomes a choice and not something you have to do just to pay the bills. Hope that helps. And again, this is just kind of scratching the surface. There's a lot with this big, beautiful bill, but lots to be excited about if you are a dentist and a business owner. So hope that helps. Have a great day. Take care. Thanks.